So what exactly are closing costs? Well, closing costs are the fees that a home buyer is going to pay in order to purchase a home. And it can be broken down into about four different things. The first thing is going to be the fee that you pay all of the different companies that are involved in the process of performing certain tasks in order for your loan to get done. The second part is going to be voluntary, and that's called discount points. So if a consumer says, hey, I'd like to get a lower rate than what you're offering, I'd like to pay extra money to do that, those are called discount points. The third thing is going to be prepaid items. And prepaid items are things that have to be paid in advance. And then the fourth thing is reserves. Reserves are things that have to be paid in advance when you become a property owner. So let's start with reserves. Reserves are essentially homeowners insurance and property taxes. Homeowners insurance, when you purchase a property, has to be paid in full for 12 months. Property taxes, if you have an escrow account, that's a different video, but if you have an escrow account, you're going to be required to prepay some of the property taxes. And a lot of times it depends on when property taxes are due in the area that you live in. So for example, I'm going to talk about the Raleigh, North Carolina area, Wake County. Property taxes are due in September, but they're not considered late until January. So at any time during those several months, a lender can pay the property taxes. So how many months is a lender going to collect or charge you up front for escrows? Well, it really just depends on the month that you close. Let's say that you're going to close a loan in August and your first payment isn't due until October, because you usually will skip 1 month's payment when you're doing a purchase. Well, if the taxes are due in September, they have to be paid if you're going to be closing in August, because you're not even going to have, make your first mortgage payment until after the tax bill is due. So in that case, the seller's going to prorate the taxes from January 1 through your closing date in August, and then you have to pay the difference to make sure that 12 months are covered. So you're probably going to be paying, I don't know, maybe 5 or 6 months. And out of that 5 or 6 months, 3 to 4 is going to go to pay the bill. And then they're going to keep a 2-month reserve in the escrow account at all times. So how much you need for closing cost? It really just depends. It's going to depend on when you close, when your county assesses the property taxes when they're due. It's also going to depend on how much your purchase price is and how much down payment you have. So there's just really no easy answer to how much are my closing costs, but a loan officer that's working in your area should be able to answer that question. They're going to need to know what's your purchase price, what's your down payment, and whether or not you're going to have escrows or not is going to make a big difference on your total closing cost. All right, so let's go back to the very beginning. You've got all these different companies that are involved in the process, and they're going to charge you a fee. Some of those companies can include a mortgage lender, which is what I do, credit reporting agency, property appraiser, home inspector, settlement costs, which is either going to be a real estate attorney in some states, and in other states it's going to be an escrow officer or escrow company. You have title insurance. There's owner's and lender's title. Lender's title is always mandatory. Owner's title insurance is typically going to be voluntary, so it's up to you whether or not you want to pay for it. Besides that, you have the insurance company who's going to charge you for homeowner's insurance. And then again, the escrows, which we already covered. So all in all, those are closing costs. I would say typically closing costs run somewhere between 2 to 3.5% of the purchase price, but not always. That's a very, very rough generic term. But at least that gives you something to think about. So if you're looking to buy a house with no down payment, that doesn't mean that you can just walk in with nothing out of pocket, because you still have closing costs. You still have to pay the appraiser, the lender, credit reporting agency, flood certification, property taxes, homeowner's insurance. So make sure that you talk to a loan officer and figure out what the those closing costs are going to be like before you get too far into the process.